What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 25th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're going to be focusing in on two critical topics that are important to understand right now in the market, and that is not only why Bitcoin is moving the way that it is and why we are very, very close to breaking 20K here in the next day or so, but along with that as well, talking about some key altcoins in the crypto market that we're going to be watching. So stay tuned. You won't want to miss any of it, guys. Let's go ahead and dive straight into the market analysis here, taking a look over the top 100 plays over the last 24 hours. The vast majority of altcoins in the green here, with a lot of plays here holding up against Bitcoin in regards to price action. Many plays here. And we've got a lot of them that are actually leading the way, which we'll talk about, like Stellar Lumens, which we made a call on back a couple days ago and have done really good so far on the trade. But there's a lot of old traditional cryptocurrencies that have been well established in this space for some time. Some very familiar plays leading the way. Taking a look here at the global cryptocurrency market cap, I want to spend some time to revisit this. I don't always talk about it like I used to, but you can see here that just in the past few weeks, we have a leapfrogged in valuation for not only just Bitcoin, but the broader crypto market. We can see that the total market capitalization still has a way to go. We peaked out a little bit above $800 billion here if you zoom in and get the actual precise target. However, if we take a look at excluding Bitcoin, altcoins are still in the beginning phase of this cycle. That's the important thing to keep in mind, guys. When you see these kind of vertical moves in the market, there's no problem with taking profit, but also don't be too wary in this case because a lot of these coins are far away from their peak valuations, especially a lot of the established cryptocurrencies. Now, let's go ahead and just take a look at the chart here for Bitcoin. We can see here very critically that Bitcoin is sitting around 19,300 every single time we're getting a pullback here. If we dive here to the hourly chart, we're reaching higher highs and higher lows. Again, this is some simple thing that I want to teach you guys because I know many of you are probably getting into crypto or markets for your first time or might be looking at trying to trade these markets as markets are getting much more exciting. But I want to teach you guys something that I think is critical comparative to traditional technical analysis, and that's looking for simply higher lows and higher highs. And that's a matter here when you take a look at something like the hourly chart, noticing in this case that every time, for example, Bitcoin is moving in its price, we're seeing that generally speaking, the lows are going towards higher ranges. You can even draw a line here, for example, and we've got a few other lines we could add here. Now, the critical thing here, what you want to see is that we continue to set these higher lows and we also continue to set higher highs. And what better way to do that than to simply draw a line from the previous relative high, and if we close above there, then that gives room for it to continue climbing higher to some degree. And then after that, we want to see a higher low than what we set back here. We don't want to see the correction overwhelm from those previous lows. And to be honest, guys, we haven't seen this yet. So far, Bitcoin's price is continuing to chug higher. And anytime there's a dip in the market, people are coming back to buy it. Now, I'm going to be explaining throughout the video why that is. I want to dive into altcoins here in the short term, but just want to say on the technicals here, we can see that the momentum is very clear here for Bitcoin, whether we take a look at the hourly or the 4-hour chart. I mean, this could really spike up here in the next 24 hours, and we could reach our historic all-time highs and actually set the figure because technically we never actually hit exactly 20K. In this case, we might be able to hit that big even number, and it'll be really exciting to see what happens in regards to price if we get a major sell-off or if we see a continuation higher. Above all, the chart looks phenomenal. But I want to go ahead and talk about altcoins because altcoins are blowing Bitcoin out of the water right now, especially some of the key plays in the market. For example, Stellar Lumens, which we talked about 2 days ago in this case, has paid off phenomenally well. We've made a solid return here against Bitcoin, and this is, again, a critical thing to keep in mind, not just looking at the dollar chart, which looks great, but looking at the Bitcoin chart. Stellar Lumens against Bitcoin is now at an all-time relative high here against July's price range, right? So this, again, going back here through all of 2019 and 2020, it's at its highest point since June of 2019, blowing past the summer highs for altcoins. This is absolutely phenomenal to see, and I'm excited to see this continue probably for another day or so as we're just about to break up above this point. If anything, we might test a little bit of resistance here and then break out, but I think above all, the chart looks really nice. XRP, very similar in the sense of price action, not only within a matter of a couple of days, chugging towards its relative highs back here in October of 2019, but setting it up for possibly a major breakout climbing forward here. We've seen XRP do better than this or climb even higher in the past. I have no doubt that it could possibly recover even further against its losses going up higher. But again, just putting it in perspective here, more than a year in this case has been recouped in a couple of days in the sense of losses against Bitcoin. This shows just how much eagerness is coming to the altcoin space. And we can broadly see this when we take a look at altcoin dominance. And again, what I think is going to happen here, now that we're approaching these 20K highs, we're going to see altcoin dominance here and Bitcoin dominance, no matter what you're looking at, push sideways. And after we hit that 20K high, if we get some major resistance there, altcoin dominance is going to spike back up. Liquidity is going to surge into altcoins. It's exactly what happened last time around. And we'll have to see how it plays out. But I know a lot of people are anticipating this, and that's why we're seeing this kind of price action. We've got a lot of people who are already building those positions. Now, what are some of the altcoins in the market that we should be watching here? One of them I'm holding currently and still looking to add maybe more to is Omise Go. Now, Omise Go, as many of you know, back from 2017 has been an established play, and they're really focusing on layer 2 solutions in the crypto space. The price action here looks phenomenal. A double bottom against Bitcoin on key resistance from the past. And along with this as well, we've seen that Omise Go already 2 times here in 2020, back in May here as well as in August, has already had 2 super cycles for its price action. And now I'm really excited to see if we can get back to those all-time highs and possibly climb even higher. So again, this is a really nice setup here. It's made parabolic moves just in this past year. Along with that as well, we've got Uni, which is showcasing those simple things we look for. It had, in this case, a major kind of initial listing rally here for its price, and then we saw a slow but steady decline here for its price here. And now we're seeing higher lows, and now it's a question of, can we break above this previous line and set a new relative high here? If we get this, I think Uni is going to pop off. It's going to be the signal to be focused on DeFi tokens like Uni and Chainlink and a lot of the other plays in the market. But again, keeping in mind on that. And along with that as well, another DeFi play, just one of the kind of small caps I'm watching in the market here, is a play called XVS, or Venus. Now, in this case, there's a key thing that we want to watch for here, which is that we hope to get a double bottom here on the lows here. It's a coin that's on Binance right now, as a recent listing. And I think, again, these kind of smaller cap plays in the DeFi space are what's going to interest me personally, because if we get assigned to those higher lows and higher highs, then it's a matter in this case that we're going to probably break out and continue climbing here. A lot of these plays are going to be interesting. And to be honest, Venus in this case is a bit more like a mixture of kind of a protocol like Compound, but also the functionality of a governance system like MakerDAO that generates stablecoins like DAI. So it's kind of a hybrid between the two from what I can understand. Right now, it's mainly a trade. And the thing I look for is for market to scale here. Sitting right below a $20 million market cap, Kava, which is a similar project, sitting at $100 million, and MakerDAO sitting around $600 million. Your odds of doubling or tripling are a lot higher with the smaller cap plays, and I have a feeling that as DeFi picks up, we're going to see more people leapfrog towards DeFi plays, so we have to be prepared for it. And the last thing I want to talk about on altcoins here, before we talk about Bitcoin, is taking a look at Ampleforth. And as with most things, I like to look at them compared to Bitcoin. So Ampleforth's market cap is already climbing and doing well. It's not only keeping up with Bitcoin, but over the last week has excessively surpassed Bitcoin's performance in this case. And now it's a matter of this continuing to climb, setting in that third relative high. And I think from that point on, Ampleforth is just going to continue climbing. I'll go ahead and just pull up the market cap here just to showcase the chart here, so you guys can see the kind of pattern that it's showcasing. Take a look at this. We've seen Ampleforth make massive moves in the past. And again, I've been vehement since back in August of the summer, as we had a correction back here in Ampleforth, to watch this one going forward into the rest of 2020 and into 2021. It's a very unique and interesting asset here that has a lot of room to make some big moves in the long run. Okay, so let's go ahead here and talk a little bit about Bitcoin. I know many people out there are curious if this is just a FOMO rally. People are speculating that there's no reason for Bitcoin to be at this price range here. This is a very good question, and I want to go about answering this in the most diligent way I possibly can. The best place I feel I can start off here is to tell you all, above all, the short, sweet, simple answer here as to what's happening. As with any market out there on the planet, outside of some small tricks that can be used, usually in actually traditional financial markets. It's not that they can't be used in crypto, but they're mainly used, and actually we found many major banks use them. Right? There's no manipulation or severe level of manipulation going on in cryptocurrency markets. What's going on here is basic supply and demand economics. I know it's not a crazy sexy answer. I know it's not something that's elusive or probably as interesting as many people would be looking for, but it is supply and demand. And it's probably one of the best fundamental narratives that we have for Bitcoin as an asset. people constantly argue whether or not Bitcoin is a store of value or not. Does it have the properties to be a store of value? Does it have the properties to become eventually a currency that the world would use, or something that people could rely on? Well, no matter if that's true or not, and no matter if we've gotten to that point or not, we can see that supply and demand is showcasing people are betting. In this case, more people, in this case, buyers, are believing that Bitcoin is an emerging store of value worth holding versus sellers. So let's go ahead and talk about this. Well, Dan Moorhead, who's the head of Pantera Capital, one of the largest VC funds in the crypto space, put out a ton of great charts here demonstrating, in this case, that we are not only oversold in Bitcoin's price, broadly speaking, against the trend, but along with this, that we've got a lot of dynamics here displaying the difference in supply and demand. So first off, we've got a deviation from the trend chart here that I'll actually just go ahead and pull up on the chart so you guys can see it here. So this showcases Bitcoin's deviation from its overall trend. Again, below this dotted line here, this is 0% deviation. So we have lower deviations where Bitcoin is oversold against where it should be on the broader trend. And along with that as well, a over 200% leap here where valuations skyrocket across that deviation from the trend. It goes off the chart here, more than 200%. And this is what we tend to see here, that Bitcoin has basically, if you want to imagine it, a nice consistent line on the chart and how Bitcoin's price is correlating around it. So we're at a discount range here coming towards the close of the year. We're just getting started here, guys. This is just like back in late 2016, where we were revisiting the previous all-time highs. There's nothing shocking about this. Now, I want to go ahead and dive into some of the scarcity here, right? The scarcity that drives Bitcoin's price. Talking about the supply and demand side of economics here, we have to understand two things. For those who may not know, Bitcoin has what's known as the halving event every 4 years. And it's where the supply schedule or the introduction of new Bitcoin into the supply, similar to how a central bank would print new money, is cut in half. So unlike central banks that are constantly printing at whatever rate they want, Bitcoin has a fixed supply schedule towards its eventual 21 million coins. There will never be more than this. So we know how many Bitcoin are going to be created. And in the short term, there are these intervals where the introduction of new coins declines. So instead of having a certain amount of Bitcoin every 4 years, it gets cut in half. And now we have this not only supply shock that came back in mid-2020 in this case, but along with this as well, we've got some interesting developments on the demand side, in this case, the buy side. And that is the buying activity from Cash App, as well as many other fintech companies out there on the market that are servicing retail purchasers of Bitcoin. Pre-halving, Cash App was buying 20% of all newly minted Bitcoins on the market, 20% of newly introduced Bitcoins. It's now purchasing at its current demand 40% of available Bitcoins in the market. And this is something that's so critical to understand because it puts away any technical analysis. It puts away any type of personal bias here. We know here that there is more demand coming in for Bitcoin. In this case, setting up a perfect goalpost to get up to somewhere around 100K to 200K here going for the next cycle. The data science models here prove it. Taking a look here as well, Dan put out another great tweet. For billions of people, the price of Bitcoin is already at all-time highs. One thing that's critical to keep in mind here with this chart, and sorry if my webcam gets in the way, guys, I'll actually zoom out a bit. The important thing to keep in mind is that in US dollars, which is what we tend to use, we can see that Bitcoin is obviously clearly close to all-time highs, but for many currencies out there, Bitcoin's already off the chart. If you want to talk about Latin America, the Argentinian peso, it's doing phenomenal. The Turkish lira, a lot of these currencies, the Brazilian real, the Nigerian real, South African rand, a lot of foreign currencies that have been experiencing hyperinflation. Bitcoin is way off the charts now. It's doing phenomenal in this case. So again, as people are looking for that emerging store of value, something that may not even be tied towards the dollar, it can be a good hedge for some people. And here's the interesting thing. As we're seeing this shift here in supply and demand, where it's driving up price in Bitcoin, we haven't even seen the beginning of the Google search trends. Now, for those who are here for the first time, or maybe may not remember, using Google Trends was a very interesting way to spot when kind of retail enters into the market, or what basically retail is a term utilized for everyday traders in this case. I would say that many of us probably here are retail traders. We're not big institutions, but we're the early wave of retail investors or traders in the market. What we're waiting for is a significant breakout, just like we would do on technical analysis above these relative highs here, right back in 2019 when there was a spike. Are we going to see something similar here in 2020 soon enough? We haven't even gotten there yet, guys. And the vast majority of institutions have not gotten into the market. The point I want to make here is that whether you're talking about retail traders or you're talking about the big banks, the institutions, the massive hedge funds out there on the market, we haven't even seen a grain of salt to the scale of what we're about to see going into 2021 when it comes to institutions. The moment we break over 20K is our institutional moment. That is the moment when every bank, every investment manager, every pension fund manager, every hedge fund, every family fund can no longer ignore Bitcoin as an asset. It is far outpacing the performance of equities and gold and silver and other commodities, as well as bonds. There's no reason to ignore it now as a potential 1 to 2% position in anyone's portfolio. It is ignorant to ignore it at this point. And as we see companies like PayPal and Square's Cash App scooping up 100% of the newly mined Bitcoin, the newly available supply, it is drying up the supply in the market to where we haven't even seen institutions get in. What happens when institutional liquidity comes into the market? What happens when that new wave of retail investors comes in? That's what justifies the crazy magnitude of price moves such as 100K to 200K. So again, this is what's important to keep in mind. It is supply and demand. It's nothing new. It's nothing dramatically revolutionary. It's the fact that we have more supply, in this case, getting drained from the market. So there's less supply, broadly speaking, and more demand on the market. These are the two dynamics that have the ultimate drive for price. It is the best scenario you can have to drive Bitcoin's price higher. Now let's talk a bit on a fundamental narrative here, because it's not just that people are buying Bitcoin here. There is an institutional narrative that we have to keep in mind. The central banks continue to stack onto their balance sheets, whether it's the Fed, the ECB. We can see here the Fed is cusping back up, getting close to its all-time highs for its balance sheet. It looks like it's going to continue climbing higher. The ECB has been leading the way here, continuing to chart forward on more and more stimulus activity. The People's Bank of China starting to charter back upwards here to a high that we haven't seen since back in 2018. And the Bank of Japan trailing right behind the United States. Central banks on a stimulus binge in this case. So we've not only got record amounts of cash being created and injected into the economy, but we also have another dynamic here, which is the interest rates of central banks. Take a look here at some of the major world central banks, some of the largest ones in the world. The Swiss National Bank, Bank of Japan, Federal Reserve, European Central Bank, Bank of England, Reserve Bank of Australia, Bank of Canada, Reserve Bank of New Zealand, the Central Bank of Brazil. Going down the list here, we see rates increasing, but the vast majority of their interest rates from the Swiss National Bank here to the European Central Bank are negative or 0%. We can see here as well the Bank of England, Reserve Bank of Australia, Bank of Canada, Reserve Bank of New Zealand, all very close, below 0.25%. Now, a lot of people will probably turn off the video here and say, oh, this is this boring stuff, Nick. Why are you taking a look at traditional markets? This isn't some crazy new altcoin. It's not Bitcoin going to all-time highs. Why does this matter to me? It matters because with any market, if you want Bitcoin to go to 100K to 200K, you're going to need a catalyst shift. You're going to need inflows into the market. As we talked about, demand is the most critical portion here. You're going to need inflows or buyers coming into the market, moving liquidity from somewhere else in the financial world. And the most critical asset class, one of the largest asset classes in the world that's in deep, deep trouble that could turn to something like Bitcoin, is treasuries and government bonds. Treasuries specifically being U.S. government bonds and also other government bonds across the world. And interest rates going down to zero, if not negative territory. This is the worst case for government bonds and one of the best cases for Bitcoin. Right now, across the globe, if you guys know how bonds work, broadly speaking, it's an IOU from the government. They should, in a traditional world, be paying you interest for holding those bonds. But here's the interesting catch. Right now, there is a world, a twilight zone of the financial world, where there are over $17 trillion of wealth locked up in bonds that are actually penalizing their holders. They are paying, in this case, or not so much paying, they are reaping a negative interest rate off of these treasury bonds. And not just treasuries, but government bonds in general. And the crazy thing here is that this isn't even the surface of the problem here. Again, we could spend all the time here to talk about why this is bad. Obviously, it's bad because you're being penalized to basically hold an IOU. It doesn't make sense. It's completely out of our realm of sanity here. Right? Even Warren Buffett says this, if you want to just get some context here. He doesn't get it, right? Well, basically, In a world where central bank interest rates, in this case, like the federal funds rate, are going into 0% territory, it drives government bonds, in this case, to go towards a relative territory as well. That's similar to the rate, if not lower. And we can see here as well that treasuries are caught in a really interesting storm here between the worries about the coronavirus and everything in traditional markets, inflation doubts. It's putting treasuries in a really bad spot, because if the central banks go back to stimulating more and dropping interest rates even lower, they've said in many cases that they're not. Some have admitted that they're looking towards it, but they're going to. Japan has been the model for this. As we can see here, Japan and Germany and Switzerland, they've already been a couple years ahead of us in this cycle. And the United States, Canada, Italy, the UK, and many other countries are right on the brink of doing this themselves. The charts are even worse than this. They're down towards breaking levels here around 0%. It's just a matter of an adjustment to the rate lower, and you're now in negative territory. But here's the interesting thing here. That $17 trillion figure we talked about, it's not even the full picture. The full picture here, if you actually adjust for inflation, is that the vast majority of these countries, the vast majority of these currencies, these bonds, the bonds have already been in negative yielding territory. It's what's known as real yielding, the real yield on bonds in this case, and it's factoring in the inflation rate of currency. So since back here in 2011, 2012, 2013, we've already been experiencing bonds, in this case, going towards negative territory. If it wasn't mandated by governments that people have to hold some portion of allocation of bonds in their portfolio, bonds probably wouldn't have such popularity or people's fear of traditional markets. Well, now it's getting to a point where I have no doubt if we were to expand out this chart here and take into mind the real yielding effect of high inflation rates of central bank monetary policy, where we've boosted the currency supply by 25, 30% in many countries or regions. And we also have lower interest rates than we've ever had historically in many countries. We are seeing real yields for bonds at some of the most historic lows we've ever seen in history. Let's just go ahead and take a look here at government bond yields over the last few years. This is the US 10-year Treasury yield. Again, something you probably wouldn't look at, something that seems quite boring. Well, this has massive ramifications. The yield has gone from around 3.2%, something that at least kept up with inflation according to the CPI, or the Consumer Price Index, here back in November 2018, dropping all the way down here in March of 2020 to 0.3%. Not even keeping up with inflation. And we've only made a slight rebound here on hopes that central banks might not come up with some major central bank policy and that interest rates will hold where they are. However, just like we do with TA, we've been setting in continuous lower highs. The reverse sign of what we've been seeing in crypto, showcasing that rates are probably going to keep going down. Take a look at the US 2-year yield. Same exact thing here. Continuous lower highs. No need for indicators, no need to complicate it, just looking at price here with a significant decline after multiple lower highs. And we're seeing the exact same thing here. We can't even break above the previous high here. What happens when we come down to this support range and we break through it? Negative yields officially hit the stage. And it makes people realize that they're not only eventually being penalized by inflation in this case, many people don't know that, but that they're actually getting paid a negative yield, and it's being shown to their faces. So how big are these markets that we're talking about? Why is this such a big thing? Why am I rambling on about this longer than I usually would? Well, because this is not only a multi-trillion-dollar market in the US when we're talking about US treasuries. When we talk about global government bonds that could go into negative interest rate territory, we're talking about tens of trillions. We're at 17 trillion right now, but we are on the verge here of a negative interest rate shift that could push that number to $30 to $40 trillion here in the next year alone. It sounds crazy, but it's very, very plausible because these rates are variable. They can change. The yield on these bonds can change over time. So again, this is the multi-trillion-dollar narrative that could drive Bitcoin to higher prices. It's not as sexy as what maybe some other people talk about or some of the things that the headlines are focusing on, but it's the real thing that actually is going to substantiate a rally towards 100 to 200K outside of just speculators in the market. And it's a beautiful narrative that we can focus on over the next coming year. So again, if you guys are just getting started here with crypto, if you're just getting started in the process of, buying your first crypto, you can always check out Digifox. It's my crypto wallet that I've been working on. It's a great place to get started. We just had our peak number of users since back in July, relatively close to when we launched. There's a lot of people on there buying their first crypto, buying crypto for lower fees than most major exchanges, as well as earning interest on your crypto. And I can tell you guys, we've got a very big reward for those of you who are just getting started on the app ever since back and launched to here today. So I recommend you guys try out the app. It'll be worth your time. Give it a shot. And the last thing I want to talk about here as well, if you want to get started on Digifox as well, there's a link at the top of the description as well as the comments, so you can get started today. Find it on iOS and Android. But I wanted to spend some time here to talk as well about something from our sponsor partner, iTrustCapital. There's some really important news coming out from the IRS in regards to how they're actually going about enforcing tax documentation for a lot of people who had supposedly not paid taxes in this case. The IRS has actually mistakenly sent warning notices to a lot of Coinbase users. This has been a big case for some time with the IRS. And again, it proves further and further here to the overall growing complexity of taxes, not just in the United States, but abroad here. We have to really have this conversation of how the world is going to go about actually developing a tax code. And the OECD, a massive global organization of multiple participating countries, are actually coming together to determine the future of tax law for crypto. But with the continued uncertainty here, one thing that can be assured here is that, above all, you want to look to see if there's ways where you can invest and trade where you don't have to worry about the complexities of taxes. And one of the ways you can do that is looking at a crypto IRA. And that can be found down below in the description. We'll have a link to our partner, iTrustCapital, a great company in this case, where you can trade similar to a lot of your traditional platforms, pay about the same fees here, but at the same time, be able to put it in a shelter in this case that's going to allow you to basically push off your taxable events until you eventually close the account, much like you would with a traditional IRA. So again, recommend you guys check that out. But all in all, I've rambled on enough today, guys. The markets are continuing to look extremely exciting, whether you're looking over the last 24 hours, over the last 7 days, or into the future. I'm so excited to be here with you guys. And the only thing I ask from you all is that if you like this video, drop a like, consider subscribing and hitting the bell icon so as these markets continue to get more exciting, you don't miss a thing. We've got a lot of exciting videos coming up when I get back home on the East Coast. I'm going to be doing my top 10 altcoin video. I'm going to be doing a video talking about the kind of macro picture with Bitcoin to take everything in. We've got lots of things to discuss then, so I'll see you all in the next video. Take care, everyone.